Buyers and sellers alike have been waiting for mortgage rates to drop below 6.5% for a while. But what if 6.5%, 7% is our new normal? Yeah, I know everybody has been talking about the new Fed chair coming in, hoping that between him and President Trump, mortgage rates would fall. But what we've seen so far is that interest rates have been hovering around 6.5%. And I don't know, but personally, I don't expect that to change anytime soon. So what does that mean for buyers? Well, on an $800,000 mortgage, a 6.5% rate means it's about $260 more a month than 6%. So it's not a huge deal. It's really more of a perception than a reality. But that perception is huge. And I'm telling you guys, anytime I'm at open houses or talking with buyers or sellers, that's the number one question that everybody asks is when are these rates going to fall again? Fall below 6, 5.5%, 5%. I really don't see that happening anytime soon. So it's going to have a couple of effects. Obviously, we talked, number one, it's going to raise buyers' monthly payments. So it puts a, kind of a cap on how much buyers can afford. But number two, it prolongs this lockdown effect for sellers, right? Because so many sellers out there have rates between 3 and 4% that if rates are at 6.5%, there's simply going to be fewer sellers out there. So you're going to have fewer supply, but also less demand because, again, buyers simply can't afford more homes. So if that were me, I would focus in on 6.5% rates being the normal. If you can afford a home and you find something great, go ahead and buy it. Don't expect rates to drop to 6, 5.5% anytime soon. And if you're a seller, well, don't depend on the mortgage rates to determine your desire to sell. You're either going to sell or you're not based on other factors. But I think we're in this 6.5%, maybe even 7% environment for a long time.